What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at Nvidia stock, ticker symbol NVDA, on a variety of time frames in anticipation of the next trading day, Tuesday, April 30th. Alright guys, at the end of it, it was relatively unchanged, but still quite a bit to talk about here today. 22 cents a share to the upside, that's plus 0.03% in regular trading hours. We shot that out of the water in the after hours, up about another $2 in the after hours at least. Well, I guess after hours is closed now, so that's where we're going to end up here tonight. As always, take this with a grain of salt. Volume, especially if you're watching this on a phone in the after hours, you probably can hardly even see that. It's very, very low. Stocks are very easy to move in the after hours, even, believe it or not, big blue chips like our beloved Nvidia here. All right, let's take a look at this thing. Let's pull out all the bias that it was willing to give us today, starting with the volume profile. We'll take a look at the psychological levels that traders and institutions are going to be watching, myself included. We'll take a look at the expected move, and then we'll finish out with the directional bias in the chain. Let's start here on the 5-minute chart with our volume profile analysis, just really quick here. Listen, by the way, if you're new here, I cover Nvidia stock every single day. Please subscribe to the channel. I greatly appreciate it, and I'll keep the Nvidia videos coming. All right, so the primary moves that I want to look at here, this dump and recovery that we got off the open. Now, a lot of people look at a move like this, and they think, well, at the end of it, it was essentially neutral. We kind of ended up right back where we started, so that means the move itself was neutral. Well, that's not always exactly the case, because what you can see is if you peel back a layer and you look under the hood and you see some actual volume profile bias, those two moves don't have to be created equal. Okay, we'll take a look at that. I also want to take a look at this midday pump, and then we'll take a look at this kind of like dump and recovery that we got into the close. Let's take a quick little peek. So we see here off the open, very contextual open, volume fades as is normal. However, it faded a little bit more slowly than typical. However, it was such a mixed bag that I'm going to consider that a wash. We saw higher volume on both red and green bars. For example, we saw the volume hang on a little deeper into the day, I should say, on these 3 red bars. Typically, we expect volume to tank off a little earlier than we saw here. However, that was quickly kind of flipped or washed when you get these higher volume green bars, tanks off on red. Higher volume green, tanks off on red. Higher volume green, and so on. To me, they kind of wash each other out, but it's worth understanding that's what's going on. Now, as we move into the middle of the day, you take a look here. Remember this little pop that we got intraday? This right here is, of course, the corresponding volume. We did see increasing volume on consecutive green bars. It popped, and then as the move itself kind of leveled out and started to pull back here, we got volume doing the exact same thing, starting to pull back. That is a small amount of bullish bias there. And then into the close, you know, very normal. We get a couple of out-of-context bars here, kind of cancel each other out. This is very normal, though. That high volume, I know that big red bar probably looks scary to a lot of you. That's institutional rebalancing. Okay, this is very normal. We see this on a lot of blue chip stocks on the first 5-minute bar after the bell. That's when those algorithms seem to have been lately triggering, pumping up volume, and you'll notice, right? It's battle bars. Those are battle bars. A lot of buying, a lot of selling, very little actual movement with a couple of wicks. Okay, so nothing to worry about there. Let's move on to the psychological self-fulfilling prophecy levels here on Nvidia to pay attention to, especially those of you who are trading the name. This is where the psychology comes into play. You guys know my view on this, right? For those of you who are new, I'll explain. In the very short term, I believe this is all psychology. Okay, it's been proven to me over and over and over again that the self-fulfilling prophecy psychological mentality is the way to go in the very short term. As you extend out into the midterm, especially, of course, long term, the fundamentals 100% take over. Okay? In the very short term, though, unless you have a fundamental repricing, like in earnings or something, unless you have that, it's all psychology. So I'm only interested in looking at the things in a day-to-day context like this video. I'm only interested in looking at the things that drive psychology, like the 50-period moving average and the 200-period moving average on a heavily watched chart like the 30-minute in this case. You can see here that we spent the entire day basically bouncing along the 50 period. That's interesting to see. We held it. We're not incredibly high above the level. There's two ways to look at this. I look at that and I say, well, that's a good thing, right? Because you guys know I'm always looking for the 50 period to be as close to the stock, as long as it's ascending, as possible, to kind of discourage any bearish argument that, hey, this thing needs to pull in to test the 50 period on the 30-minute chart, whatever. Right? I like that about this. However, the stock is not necessarily moving upside aggressively, at least today. Last couple of days, trading days, of course, it has been. But at least today. So on the flip side of that, looking at that in a positive light, someone could look at this and say, well, this is really close to breaking. Now listen, it all depends on the tests that we get. Ideally, bulls, what I would really want to see, since we're kind of flat today, heading into tomorrow, intraday, I'd really like to see a retest of the 50 period. I don't care what volume that occurs on, since we're already above the level, as long as we were to see a, like, boom, right? A high volume bounce away from the level. Get away and make the 50, pull it up and make it come to us. Whereas you bears, since we're on the wrong side of the ball for you guys, a high volume downside break through the 50 period, low volume on the retest, right? A small sample size betting on the break, and then boom, it rejects on high volume as all the shorts and those selling longs pile over on top of each other to get out as that rejects and confirms itself. So that's the 30-minute chart. Let's take a look now at the 4-hour chart. You can see here, guys, this is very, very in play, very contextual right now. This 200 period, I mean, come on, guys. Look at that. The 200 period on the 4-hour, if you're not paying attention to this, I think you're missing part of the story here. This is clearly in play in the last couple of days. This is really simple, right? Bears, you want to see finally a rejection off the 200 period. Set yourselves up for, at least on the 4-hour in particular, a downside test of that 50 period. Okay? Bulls, want to see that hold as support. It's struggling to claim it as anything really right now. Arguably, it's acting more as a resistance level than a support level because we're kind of struggling to get above it coming from below. Bulls, I would love to see this rip up through, come in for a retest, and then bounce on high volume. But really, the 4-hour chart, you're really only working with 2 candles, so it's kind of hard to see a retest in the same day. Bulls, a high volume rip up through there and closing with some distance in between the 200 period on the 4-hour and the actual stock price on as much volume as possible. Best case scenario for us bulls. Us bears out there, just want to see that reject, okay? And do so on as much volume as possible. As always, the bigger the sample size, moving things in your direction, the better. All right, guys, the daily, right? This is the most important chart of all, and you can see this one is very in play lately. Let's take a look. So you can see that in the last couple of days, heading into the weekend, right, we ripped up through not only 850, which is a big psychological and technical level, but also the 50-day moving average. We're now still about halfway between 850 and 9, which is the current channel. But today, you know, it doesn't look like there's a lot changed today, but I mean, in my opinion, there's a lot that happened today. It's flat, right? But look at this. We ripped down, tested the 50 period, or the 50-day, since we're on the daily chart, which, by the way, everyone's watching this. It's unlikely that that's coincidental, right? Almost touches 850. The 50-day is curling above 8, or pulling above 850, which I like to see. I want to see separation as long as we can hold this. I like having this beefed up level where you have 2 areas in one when we're trying to claim that as support. But once it's kind of claimed as support, I want to see really the 50-day start moving upward to have an ascending level of support to help us push through 9. But we came down and tested the 50-day and bounced hard, wicked up. The buyers bought that back up, showing some confidence in that 50-day. So bulls, any test of the 50-day, I want to see that hold. But really the goal, bulls, is to get above $900 a share and hold above $900 a share. Okay, and I don't mean like 2 minutes before the close we rip up on low volume. Ideally, doing so as early in a day as possible and on as much volume as possible. Currently, though, that's about 2.5%, but we've seen crazier things out of Nvidia, haven't we? Okay, that's not really a tremendous move for the stock, but getting above 9 really, bulls, opens up the opportunity, because the next level after that is kind of back to all-time highs, if not, at least me, I'm looking at $1,000 a share after that. That's kind of the big level that I'm paying attention to, whereas bears, any test of 9, we need to reject. Okay, bears, your goal to really delay things and really kind of discourage the short-term bullish psychological thesis, get back down below the 50-day /850. If you guys can get back down in this region, test it again, reject, bears, that's, you know, that's a good couple of days, if not a week for you guys. But these big moves, like on the daily, right, they can take time. However, you can make giant leaps in a single day. All right, guys, this channel from 850 to 9, listen, it's going to pick a direction. It's just a matter of setting things up in your favor. For example, like having the 50-day down there around 850. That strengthens that level a little bit. Not by double necessarily. In my experience, it's usually strengthens things by about 50% to have two big levels kind of meeting in the middle or meeting each other. But that's helpful, but that doesn't mean it can't break. Okay, so bulls paying attention to that, bears paying attention to that as well. And those are the goals that I really have for both sides. Now, implied volatility compared to the last month or so. Again, actually, let's zoom out a little bit and then come back in to bring a couple more months in. It's up again today, okay, but it's still sitting kind of in the mid-range. If you're comparing to the last month only, like you're looking to buy calls for the next 2 to 3 weeks or something like that. You have to be contextual, right? The name of the game here is context. Compared to the last month, like going back to April 1st or so, IV's kind of high, okay? So that means that there's some Vega pumped into those contracts that you're paying up for. If you hold contracts and you've experienced some Vega pump and you continue to hold those, you're potentially running the risk of a little bit more IV crush if IV falls back to equilibrium compared to your intended trade time frame, right? The last month or so, if that's the case. But really, guys, be aware of IV. I think a lot of people brush over like Vega as a Greek, maybe because they think the audience can't like handle it or understand it or something. Guys, it's not that difficult. You seriously study up on it. You know, you're smarter than you think. You'll get it in probably less than a weekend. You'll probably learn all 5 Greeks in and out. I understand that there's a wide variety of experience levels watching these videos. I try to keep things as simple as I possibly can. Like seriously, as simple as I can, but I will never leave anything out. I will always try to explain even the more advanced topics in a simple way to keep everyone up to speed, because I don't want anyone missing out on something that I see, but I decide, you know, I'm not going to say that because I don't think they'll understand. I'm always going to let you in on what I'm seeing. Even if you don't understand it right now, give it time. In time, you'll pick up on everything, I think. Because like for me, and hang on, we'll get to the expected move and the bias here in a split second. For me though, when I'm learning something new, I would much rather somebody tells me everything that they know or that they're seeing, and maybe it goes over my head and I feel kind of dumb for a couple of days or a couple of weeks, months, whatever. I would much rather that's the case, because at least I then know what I don't know, right? Whereas if somebody's just explaining something for the sake of it being simple to understand, then they're leaving things out, and in my opinion, it's kind of a not worthwhile instruction, right? But let's take a look here. Let's look at the expected move for Nvidia. Again, we have to do a little bit of guesswork here, but we'll do the best we can. It's worth doing. Absolutely. That's why I do it every single day. The next expiration we have on Nvidia is May 3rd. That's Friday. The expected move by Friday's close compared to today, Monday's close, is plus or minus $43.49 a share. Okay, now we don't have earnings, of course, in those next 4 days. Earnings are coming up here on May 22nd. So there's no one outsized day in terms of volatility expectation. So we divide that by 4. That gives us about $10.87 expected move, but we have to add 50% back to that because that assumes 4 green days or 4 red days in a row, right? So I like to add back in this market at least about 50%. That may change, but I'll change it if it needs changing. Right now, 50% seems to be what's working best, at least for me. So I add back 50%. The expected move, with a little bit of guesswork here, tomorrow is plus or minus $16.31 a share. That is the one standard deviation expected move being priced in by the traders. Okay, that's a technical term, expected move. Listen, guys, by design, there's no directional bias priced into that. That's on purpose. Okay, because this is a different part of the picture. This is the volatility expectation, which you get your directional bias by doing the full analysis. We'll look at the options bias here in a second. We do everything we can to get as well-rounded of an image as possible. And then you, of course, need to make your own decision there. But if you're trading options, that's only half the story. If you're trading options and trying to be effective at it, you have to understand what the market expects in terms of volatility. And then if you disagree with that, that's actually a good thing because you can use that to position yourself more effectively. And then if you end up being correct in your disagreement, you end up making some money. But that's the expected move. The last thing we can do here, the options bias. This is all from today. Okay, this volume is just today. 908,000 total contracts traded today. 578, well, really, if we round up, 579,000 calls, 330,000 puts. So we are seeing a bullish bias in the overall call put ratio. If we break this down, this is a video geared toward tomorrow, by the 0 to 20 delta range. Those are those far out of the money, on average, much shorter expiration contracts. This makes up the short-term speculators. Okay, at least that's what I like to call it. 197,000 calls, 147,000 puts. So again, a call side bias as well out of the short-term speculators here today. Guys, if you want to come trade with me every single day, take a look at that link in the pinned comment. I'm sending out my personal scalp setup alerts, my personal in-play stock alerts. Those are the stocks that make up, I'd say at this point, the majority of my trading volume. On my unusual options activity, that's all human verified. I've been tracking that for years, guys. That's how I keep track of what the whales are up to. Okay, and then of course, my small group, Platinum One-on-One, that I'm working with each day. You can get grandfathered in at the current rate, make you kind of immune, right, to future price raises at that link in the pinned comment. Listen, guys, if you're getting value out of these videos, I ask one thing. It takes half a second. It's 100% free. Please just leave a like and then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.